And joining us now in the studios is Hemang Jani, the Senior Vice President at Sharekhan, to help us understand all of that information and figure out what this means for our stock investments. Hemang, thank you so much for joining us. I want to start off by asking you about Coal India. We know that TCI, which is one of the largest minority shareholders of the company, has come out and said the company is not being run keeping the interest of the shareholders in mind. First of all, how much of a case do you think the company, the investor has? And as a retail investor, should I also be concerned if the company is not being run with the interest of shareholders in mind?
Yeah, it's an important point because there are so many PSU companies where the government has a larger controlling stake, and some of the decisions which are being made, they may not necessarily be in the interest of shareholders. Now, in this particular case, because TCI is a global investor, they are able to kind of put pressure on the management to ensure that, all the decisions that are being taken are in the interest. But we feel that, this is not the first instance. And in our country, the laws or the act is not that strong enough for you to really influence the management beyond a point. But there is not much that you can do about it. So I believe that, it's just a pressure tactic. And yes, I mean, till the clarity emerges on the extent of loss that Coal India will suffer because of their entering into FSA, it is very difficult to put out a number to it.
When we look at investing in PSUs, there's this whole concept that the government has majority stake in these companies, so they're going to be steady, they're not going anywhere. But on the other hand, most of the PSUs, including ONGC, have the whole subsidy burden. They, like you said, decisions are not always taken with the shareholders' interest in mind. So as a retail investor, is that something that I should be aware of when I invest in a PSU, like Coal India, for example?
Yeah, that's a risk that you will have to keep in mind that, sometimes the government would take decisions which would not be in the interest of the minority shareholders, and which is why some of these companies, they don't get the right kind of valuation.
If I'm a retail investor at home watching right now, I'm looking at what's happening with Coal India, do you think it's good for the company? Do you think I should continue to hold on to this stock?
I believe, some clarity is required in terms of, what would be the impact on Coal India of their entering into long-term supply agreement. What happens when they have to import the coal, and if there are fluctuations in the price, will they be able to pass on this additional cost to the consumers, or they will have to absorb? Once we have clarity, it would be, little easy to take that call. Right now, I believe, because of this uncertainty, the stock may remain under pressure.
If you're holding Coal India right now, wait for some more clarity on all of this information. When the stock settles a little bit, we'll be in a better position to take a call on what to do with that stock as long-term investors. The other thing that I want to talk about is, of course, the gold loan companies. We know RBI came out with some stringent regulations on how these companies should hand out those gold loans. There's been talk about the fact that these new rules will, of course, impact the margins of the two companies as well. We're talking specifically about Muthoot Finance and Manappuram Finance. From your point of view, how much do you expect this to slow their growth down going forward?
See, we believe that because of this norm that RBI has stipulated of capping their loan to book value of 60%, I believe that, they have been growing at a very rapid pace, about 35 to 40%. So the growth per se would come down to about 15 to 20%. Also, because of the fact that, overall cost of funding has gone up, their margins will also squeeze over the next few quarters. So I believe that overall growth and margins both would, take a hit, which is not good news for the company. So I think this sector will remain under pressure.
And of course, we know that over the week, Muthoot Finance fell about 19%, Manappuram fell 33%, which has brought their valuations down. So what's your call on these two stocks right now? First, tell me, if I'm an investor who's holding the stock, do you think it makes sense to hold on longer? And if I'm an investor who's considering the business, does it make sense to invest?
Yeah, I mean, because of the fact that these stocks have corrected, yeah, they do look attractive on valuation parameters, but I'm not very clear about what kind of growth are we going to look at. So I would really look at, some other options. I would probably look at some of the PSU banking stocks which are looking more attractive, where there is not much of confusion about the growth going forward.
Alright, so PSU banking stock, is there a stock that you could recommend to our viewers right now within that space?
Well, one could look at something like a State Bank of India, which has corrected also quite sharply and is looking pretty good at this point of time.
What if I'm holding one of the two finance stocks, either Manappuram or Muthoot? What would be your recommendation?
I would say that it makes sense to exit when there is a pullback, because we have seen a very sharp reaction in the last 2-3 weeks. So if there is any pullback in the stock,
if I see it come up over the next couple of weeks, then it makes sense to exit.
Yes.
Okay, so that's interesting information. Manappuram and Muthoot, we have seen it getting beaten down over the last 1 week. If you do see it come up over the next couple of weeks, it'd be a good time to get out. And Hemang, they're recommending SBI perhaps as a better option for you. We have time now for our portfolio segment. Now, every week we pick one lucky viewer whose entire portfolio is looked at by our guest. This week, we have Amit, who's written in. He sent us a list of the shares that he has. He tells us he doesn't have any specific time horizon. He doesn't mind holding on for the long term, which is something we love to hear. He's looking for substantial returns. He says he's new to the stock market, so he doesn't really know at what point he should be booking out. He sent us a list of the funds. I'm going to take his banking sector investments first. He has SBI, ICICI, PNB, Allahabad Bank and IDBI. He also has a couple of other stocks. But looking at his banking portfolio, he has 5 out of 8 stocks in his portfolio are banking. Is he tilted too much into one sector? Would you like to change something about his portfolio?
Yes, I think that in the overall portfolio, the exposure of the banking sector is on a higher side. And within the banking also, I feel that he has got too many of PSU banking stocks. Only ICICI Bank is one which is, private sector bank. So I believe that he can do a bit of a rebalancing and he could get out of some of the PSU banking stocks and move into something like Yes Bank or Axis Bank or even an IndusInd Bank, which is doing fairly well, so that there is a proper balance between the PSU banks and the private banking sector. And overall also I believe that he needs to reduce his exposure to the banking and increase the exposure to some of the other sectors.
Alright, the other stocks that he's holding is TCS, Reliance and Tata Steel. Now these are all strong stocks. Would you recommend he continues holding them?
Absolutely. I believe that most of these stocks are blue chip stocks and they are doing well. So TCS, I'm absolutely comfortable with that from a long-term perspective. Tata Steel also, though there is a bit of volatility in the stock because it's a commodity stock, but overall at this price point I find it very attractive. Reliance for some reasons has been languishing for a while, but since there's a buyback going on and the stock has corrected quite a bit, I believe that a retail investor with a long-term perspective can hold on to it. So it's fine. Alright,
so before we talk about the 2 stocks that he's going to recommend for us this week, I want to pull up his report card from last time. Hemang had recommended the Central Bank of India 2 months ago while it was trading at 78 rupees. He gave us a target of 110 in 1 year. That stock is now at 101, which means it's doing really well. Hemang, tell us, for investors who are holding on right now, do you think we can expect more than 110 in 2 years, or would you recommend we book out when it hits that level?
I believe that since most of the banks rallied in the past 1 month, the stock has also rallied, and yeah, I mean, I would be comfortable exiting the stock around 110 because I believe that still there is a bit of an uncertainty about how the interest rate scenario is going to play out, and the asset quality of some of the PSU banks is not that impressive. So I would be exiting the stock once it reaches a target of 110.
Alright, and for investors who didn't get in at 78, obviously 101 is a bit of a run-up at this point. What kind of upside can they expect? Do you think 101 to 110 is not enough justification to buy at this point?
Yeah, I think any investor who has not been able to buy the stock should wait for a deeper correction in the market, maybe around 75-80 levels. If it corrects, it would be a good entry point for Central Bank.
Alright, Central Bank of India, that was Hemang's call 2 months ago. Remember, it's hit about 101. He said, while it does reach 110, it might make sense to book some of your profits. Let's move on now to his value pick for this week, Aditya Birla Nuvo. Take a look.
Part of the Aditya Birla Group, Aditya Birla Nuvo has its presence across various industries including telecom, fashion, financial services and manufacturing. And it is the company's diversity that makes it a popular choice among market men. The company saw relatively flat earnings for the third quarter, with profits seeing a marginal decline due to higher depreciation and interest costs. Also, its life insurance and asset management business is facing a slowdown in growth due to regulatory changes and a dampened investment climate. Fortunately, Idea Cellular, one of the company's strongest brands, is continuing to grow steadily and will help offset the risks from the other businesses. However, fluctuation in raw material prices and forex rates will always be a key risk to AB Nuvo's various businesses and can impact earnings in the future.
Alright, so that was Aditya Birla Nuvo. That's Hemang's value pick for this week. Hemang, this is really a India economy play. It gives us a very diverse exposure through one stock. Tell us, can this be one of the few stocks in my portfolio? Can this be my core holding? Is it strong enough for that?
Absolutely. I think it has got a fairly diversified businesses, very interesting set of businesses, some of the old economy stocks, some of the new economy stocks. So I believe that this can definitely become a core long-term holding in my portfolio.
When we talk about a core holding in a portfolio, explain to us what that means. So if I have a core holding, how long should I hold on to it for?
It depends upon your time horizon, but anything which is blue chip where there's a fair bit of growth visibility and the valuations are reasonable, I am looking at a compounded annual return of about 22 to 24% over the next 3 to 5 years, and I do see a good strong visibility in a stock like Aditya Birla Nuvo.
Alright, so we're looking at quite a strong growth over the next 3 to 5 years. Now if you pull up the chart over the last maybe 3 months or so, it was at about 700 in January. It's now at 950. It's seeing some resistance at that level. How far do you expect it to go from here in the short term? Is this the right valuation to be buying into this stock?
Yeah, for somebody who has a 2 to 3 year horizon, this definitely looks like a good entry point. And our immediate target price for the stock is about 1073. But I think over a period of time, we would be looking at a return of about 22 to 24% on a compounded basis. So
would you recommend that I get in now at 950, or do I start an SIP? If I'm looking at 4 or 5 years, should I start an SIP sort of format where I'm buying one stock maybe every week or once, a little bit every month?
SIP kind of an approach would be definitely very good, because we are seeing a lot of volatility in the market. So you might see 5-10% cut in the stock price. So that would definitely be to your advantage. But sometimes an investor who has a 2 or 3 year perspective and he doesn't have money to put in at a later stage can also invest at this point of time. If it corrects a bit, he should not get perturbed.
Okay. From the information that we were reading about the news on this stock, the promoters have increased their stake over the last couple of weeks. They've invested about 1,500 crore rupees in the company. Explain to us what this means. Is this the promoters voicing their faith in the future of the company and the fact that they think it's going to give them strong returns? What would this mean from an investor's point of view?
It means that the confidence of the promoter in the business, in the company is high, and which is why they are putting money at the current price. Secondly, once the money comes into the company, it improves the liquidity conditions. So whatever growth plans that the company has, it becomes easier to implement those plans. So that is also good from a company standpoint.
It's time to move on to his growth pick of the week. We're talking about Gateway Distriparks. Take a look.
Incorporated in 1994, Gateway Distriparks, or GDL, is an integrated logistics provider and operates 4 container freight stations at India's major ports. In 2007, GDL also entered the railways freight business after the government opened up the space to private players. The company has seen a steady growth in earnings, with the third quarter of FY12 seeing a 24% rise in sales and an 18% jump in profits. This was largely helped by GDL's cold storage vertical Snowman, which grew 34% for the quarter. And with the budget awarding infrastructure status to cold storage businesses, the company will be able to raise debt at cheaper rates, which will help its margins going forward. The company's stock has gone up by 25% in the last year, and most market men have a buy call on the counter.
Alright, that was GDL. Hemang, the rail budget saw some sort of encouragement for this stock going forward. We've also seen the growth and the numbers being very good over the last couple of years. What are your expectations from this stock, and why does it make the cut to be on your list?
I believe it's a very strong integrated logistic company with a very strong presence in the container freight station business, which is generating good amount of cash, and through that cash they are able to invest in other businesses like railway corridors and cold storage chain, which is going to make it a very strong integrated play. And you mentioned that in the budget there was something in it, and 5,000 crore rupees have been allocated for the warehousing sector, and cold storage has been given infrastructure status. So these are some of the good positives for the company.
So when an industry is given infrastructure status, it means that they'll be able to raise money better, they'll be able to access infrastructure bonds. Is that what it means?
Yeah, it means that company will be able to raise money at a competitive rate through some of these infrastructure financing companies, and they also get some tax benefits.
Okay. And going forward, for an investor who gets in at this point on the stock, what are your expectations and what should be our holding period ideally?
We believe that due to the overall growth visibility across the businesses and the fact that it is available at a very reasonable valuations, we are looking at a price target of about 180 immediately in the next about 6 to 12 months time. But overall, over a next 3 to 4 year kind of time frame, it can again give a 25 to 30% kind of a CAGR return.
Alright, so 25 to 30% CAGR return, but this is again a smaller nascent industry. So from my larger portfolio, how much of an allocation should a stock like this have?
It would depend upon the investor's profile and how much he is willing to put in a growth stock. It could be anywhere from about 3% to about 7%. Overall, we believe that because of the GST introduction over the next 1 or 2 years, whenever it happens, for logistics companies it might be a game changer. So there could be a re-rating for some of these companies, which may take a while, but for a long-term investor it would make a lot of sense.
Alright, so that's the stock we're talking about, GDL right now. That's the second recommendation that Hemang has brought us on the show. Let's move on very quickly. I have time for one quick question. Himanshu has written in. He wants to know what would be the right price to buy into L&T for a long-term investor. What would be your recommendation for him?
I believe that even at this price, L&T looks quite attractive. It's available at about 13.5, 14 times forward PE. And it has got a very stable order book coming from oil and gas and few other sectors. So I believe that this is a good price, but yes, because of the volatility in the global markets, in our markets, if the stock corrects by another probably 8 to 10%, currently it's about 1300. So I think about 1200 should be a very good attractive entry point.
So if 1200 is the good attractive entry point, what should be the target on that stock right now, and what should be the holding period for L&T?
Our immediate target price is about 1800 over the next 12 months time, and as the company is into a growth phase, over a period of time it could give you an upside of about 20 to 24%.